Well, Stifel weighing in on Uber and Lyft. Now the company initiating coverage on Uber with a hold rating, warning about its long road towards profitability. But the firm took a little bit more bullish stance on Lyft, at least, reiterating its buy rating and raising its price target to $76 a share. Dan Roberts is back with me. And Dan, the one thing that stuck out to me in this is that he said that Uber's upside is limited, but there's better growth on the way for Lyft. I mean, is this just simply an underdog story kind of from the beginning?
I don't think it's an underdog story anymore. These companies are finally, in some ways, less subtly starting to diverge. Now, of course, they're in the same industry. Of course, they're competing head to head. And also, on a side note, the biggest question I have is, for those out there who already are loyalists of one or the other, how are you going to get those people to switch? Because personally, I've never been a Lyft user. I'm sure Lyft is fine, but because of that, I'm not about to download it new and try it. In New York, I like Juno, which quickly sold to Get, G-E-T-T. And then when I'm not in New York, I tend to use Uber. It's not necessarily that I think Uber's better, but that's the one I use. You know what I mean? So it's going to be hard to convert people from one to the other. Now, all that said, the Stifel difference is interesting. As you say, more bullish on Lyft than Uber. And some of the reasons are a Waymo partnership. Now, of course, Waymo isn't going to partner with Uber because those two companies hate each other and had the big lawsuit. Waymo did partner with Lyft, and that partnership is beginning to bear fruit. All right, Waymo went live with its partnership again, making available some of its self-driving minivans to Lyft riders outside of Phoenix, Arizona. We know Arizona is self-driving car testing mecca. That's where all the testing happens. So that's one thing Lyft has that Uber doesn't have. Another thing Lyft has, it's a little more focused. It's just a ride-sharing company for now. Now, of course, Waymo, all right, that's self-driving, fine. But Uber has Uber Eats. Now, of course, the Uber bulls say, well, that's a great thing. Yeah, it's a positive. And in fact, some people think that in the end, maybe Uber Eats is more interesting than Uber's core business. But the bears on Uber kind of say that this is a company that maybe wants to do too much. It's maybe stretching itself too thin. Now, one thing that's also part of both of these notes that both companies are finally doing, fewer rider incentives. So when these companies were sort of newer, it was all about CAC, and that is customer acquisition costs. How much free stuff, how much benefits, how much discounts do we want to give people to try to lure them over and get them to use our app? Now they're big enough, we're done with that. We're not going to give you a reward. You're either going to use us or you're going to use the competitor. We've got to find another way to get you to like us. And of course, if you're a shareholder, if you're an investor, you like that, because when are we going to start to see profitability? Well, you're not going to be profitable as long as you keep offering great benefits and bonuses to people to use your app.
But do you think that maybe these ride-sharing companies still need to offer those types of incentives? Because we talk about the fact that Uber now, its growth is slowing. That's been a big concern and so many of the analyst notes that we've gotten recently. And I bet you at least some of it has to do with the fact that it's not offering that many incentives.
Yeah, I think that's part of it. But also Uber's growth is slowing because now there's so many players. Like, I remember when we first started covering these companies 4 or 5 years ago, everyone kept saying, you know, one thing with this industry is there's such a low barrier to entry. You just set up an app, you know, they're not making cars. They're not actually really doing anything other than being a middleman. They're a platform, all right? They're a connector. So suddenly there was a proliferation of these apps, and then over the last 2 years, you saw a tie-up. Now we're seeing less new entrants, and instead the existing ones are selling. They're selling, and it is really splitting into, there's two giants in this space, Lyft and Uber. Lyft has closed the gap by market share a lot. Of course, Uber's still bigger. And then as you note, Uber, the growth in bookings has really slowed. It's still growing. Yeah. They're both growing, but that growth has slowed. And so I think that's a major problem, especially because everyone says with these IPOs, well, profitability, we'll worry about that down the road. But man, I think it seems like analysts and investors are more willing to be patient for profitability when it comes to Beyond Meat, when it comes to Slack. But with Uber now, you're starting to hear a lot of this. Well, it's not only is it not profitable, when will it become profitable?